Most business owners view tax season as a stressful annual event. They scramble to find receipts and invoices just days before the strict filing deadline approaches. This reactive approach practically guarantees you will overpay the IRS or miss critical deductions. If you operate a US LLC or a global company, this mistake is incredibly costly. In this video, you will get a simple year-end tax checkup you can run in one afternoon. You must shift from passive compliance to an active strategy by performing an annual tax checkup. Waiting until April to review your numbers destroys your ability to reduce your tax liability. The tax year closes on December 31st, meaning your window for action is closing fast. Innovative entrepreneurs review their financial standing well before the year ends to optimize their position. This is especially true for digital nomads and foreign owners with specific reporting requirements. Failing to organize your books now can lead to severe penalties or aggressive IRS audits. The global banking environment has become increasingly transparent regarding cross-border transactions and account holdings. Banks and tax authorities now share data faster than most business owners realize or expect. You need to understand precisely how your business is classified for tax purposes this year. Many entrepreneurs mistakenly assume their tax structure remains static, regardless of changes in revenue. A single shift in your residency or income level can completely alter your tax obligations. This is why an annual review is not just helpful, but mandatory for survival. You are watching Tax and Borders, an educational channel about U.S. taxes and cross-border business. The first step in your checkup involves a thorough review of your profit and loss statement. You cannot make informed decisions if you do not know your actual net income. Many business owners look at their bank balance and assume that it equals their taxable profit. This is a dangerous assumption that often leads to massive surprise tax bills in April. You need to categorize every single expense to ensure it is ordinary and necessary. If you have commingled personal and business funds, you must separate them immediately. The IRS looks closely for personal expenses hiding within your business deductions during an audit. Are you prepared to prove that your travel expenses were strictly for business purposes? Documentation is your only defense against an auditor who decides to disallow your deductions. Consider whether your current business entity structure remains efficient given your income level. An LLC is flexible, but it may not remain the most tax-efficient option over time. If your profits have increased significantly, you might benefit from an S corporation election. However, making that election requires you to run payroll and pay yourself a reasonable salary. If you miss the deadline for these elections, you will remain in your current status. Foreign owners of US LLCs face a completely different set of strict compliance rules. You must determine if your income is effectively connected to a trade or business in the US. If you are non-resident, this determination decides if you owe US tax or not. Filing the wrong forms due to a misunderstanding can result in fines of up to $25,000. You must also check if you have triggered any physical presence thresholds in the US. Spending too many days in the United States can accidentally make you a tax resident. These are the technical details that a simple automated software will likely miss completely. If you are new here, Tax and Borders focuses on practical US tax and banking structures. Another critical component of your annual checkup is reviewing your estimated tax payments. The US tax system operates on a pay-as-you-go basis for most active business income. If you wait until the annual filing to pay everything, you will likely face penalties. You should calculate if your quarterly payments match your actual liability for the current year. This is particularly important if your income fluctuated wildly compared to the previous tax year. Underpayment penalties are an unnecessary expense you can easily avoid with a simple calculation. We also need to discuss the status of your independent contractor relationships and payments. Did you pay any contractor more than $600 for services this year? If so, you are required to collect their tax information and file Form 1099. The IRS is cracking down on businesses that fail to report payments to contractors correctly. You must have a W-9 form on file for every U.S. vendor you paid. For foreign contractors, you need a Form W-8 to verify they are not U.S. taxpayers. Missing these forms can make you liable for the taxes that your contractors should have paid. This administrative burden is heavy, but ignoring it creates a significant audit risk for you. Now is the time to chase down those forms, not in the panic of January. You should also review your retirement contributions before the end of the calendar year. Contributions to a solo 401k or SIPP IRA can significantly lower your taxable income. However, some of these accounts must be established before December 31st to be valid. If you miss this deadline, you lose that tax-saving opportunity for the entire year. Review your inventory levels if you sell physical products across state or international borders. Your inventory valuation method affects your cost of goods sold and your final tax bill. Obsolete or damaged inventory should be written off now to reduce your taxable income. Digital nomads must verify if they have created a permanent establishment in a foreign country. Working from abroad for an extended period may trigger local corporate tax obligations. Ignoring local laws when operating a US LLC is becoming obsolete. Tax authorities worldwide are working to close the gaps that digital nomads previously exploited. Your annual checkup must include a review of your local compliance in your host country. Finally, you must organize your digital records to ensure they are audit-ready at any moment. Scrambling for receipts 5 years from now when the IRS calls is a nightmare scenario. Implement a digital system that links every transaction to a valid invoice or receipt. This habit alone can save you thousands of dollars in professional fees during an audit. The goal of this checkup is to enter the new year with clarity and confidence. You do not want to start January worrying about the mess you left behind in December. Take the time this week to schedule a meeting with your CPA or tax advisor. Ask them specifically about your entity structure, your estimated payments, and your deduction strategies. Do not accept a generic tax return preparation service without first having a strategic conversation. Your financial future depends on your ability to manage your tax obligations today proactively. Use this as general education, not individual legal or tax advice, as your situation is unique. Taking control of your taxes now is the best investment you can make for your business. Subscribe to Tax and Borders for weekly breakdowns of U.S. tax, banking, and global structures.